Japan's industrial production unexpectedly increased in September, climbing to 1% from the previous month. Now we look to Friday, where Japanese inflation rate, unemployment and interest rates are all scheduled to be released. I'm joined by Michael Taylor, lead economist at Oxford Economics, to discuss. So Michael, earlier today we saw Japan's industrial production increase unexpectedly to 1% from the month before. Is this unexpected strength enough to keep the Japanese economy out of recession in the third quarter, or does the year-on-year figure, down 0.9%, highlight ongoing weakness?
Well, I think whilst it is good news that in September there was a 1% jump in industrial production, it is necessary to recall that in the previous 2 months output fell, and over the third quarter as a whole, output is down by about 1.25%. So I'm afraid it doesn't mean that Japan will necessarily avoid recession in the third quarter. Clearly, the main influence on output and exports has been the slowdown in China, and that does appear to be feeding through. However, I personally think there's a good chance that Japan will just about avoid recession by having some growth in the third quarter, because there are signs of a rebound in consumer spending, for example, which did fall sharply in the second quarter. So hopefully Japan will narrowly avoid recession, and today's industrial production numbers at least give some hope that going into the fourth quarter, there may well be some gathering of momentum.
Uncertainties are high for the outlook of Japan's economy, and the Bank of Japan is far from the 2% inflation target. Additional easing remains a question of when, not if. The question now is, do you think the Bank of Japan will boost monetary stimulus at its Friday meeting?
It's a close call, but on balance, yes, I think they will extend their quantitative easing program to asset purchases of 100 trillion yen a year from the current 80 trillion yen a year. Their focus is very much, as you say, is on inflation, and their target measure, which is consumer prices excluding fresh food, is actually falling. It's currently down 0.1% over the last year. However, this is driven mainly by the large fall in energy prices, which are down over 10% in the last year. And the Bank of Japan are increasingly looking at measures which, not surprisingly, exclude energy. And if you do that, then there are signs actually of a bit of a pickup in inflation. If you exclude food and energy, for example, inflation is now 0.8%. And that may well pick up with the September data tomorrow as well. So the inflation picture is somewhat mixed. And the Bank of Japan could well point to this pickup in some inflation measures as a reason for not extending its quantitative easing at its meeting on Friday. However, if you look at everything taken together, if you look at the weak growth, no matter what happens with the third quarter data, obviously Japan contracted in the second quarter, it's stagnating at best, I think you would say. Inflationary pressures are weak, and no inflation measure is anywhere near the 2% inflation target. And of course, over the last few months, we've had financial market volatility. We've had the stock market down about 10% since August, and the exchange rate has appreciated notably against the US dollar. So I think if you take all those things together, that does amount to a fairly strong case for more monetary easing tomorrow.
You say the inflation picture is somewhat mixed. Does the data for interest rate and unemployment rate we'll also see tomorrow play into this at all?
Not really, no. I mean, actually, an interesting feature of the Japanese economy is, as you mentioned, there is the labour market unemployment data. Unemployment in Japan is very low. The unemployment rate is 3.4%, and if you look at other measures of labour market demand, the job to applicant ratio, for example, is at a multi-year high, suggesting there is very strong demand for labour. But what you're not seeing is that demand for labour feeding through into higher wages. The labour market earnings data, which we don't get tomorrow, we get earlier in November, is not showing a pickup in wages, and that is a big concern for the government and the authorities more generally. But the labour market data, I have no doubt tomorrow will show this continued conundrum between very low unemployment but rather and continued weak earnings growth. And interest rates across the yield curve, both from 3 months out to 10 years, are very low. That's been one of the effects of the Bank of Japan's quantitative easing over recent years. So there's not really going to be much more movement on there, I don't think. although a lot does depend on whether the Bank of Japan does actually move, and the nature of its announcement. Even if there is no extra quantitative easing tomorrow, clearly they may signal that they are minded to do so in the near future, in which case the markets may react. So a lot will clearly depend on whether they extend their quantitative easing tomorrow, and also the tone of the announcement and the statement that comes with it.
That was Michael Taylor from Oxford Economics and his insights into the Japanese economy. Now, for more market analysis and news, make sure you're clicking back to Dukascopy TV.